CG Market Watch, cryptocurrency news that you can use. And today, Bitcoin's price has risen up to 6,800 over the weekend. And we have seen how Bitcoin's price has hovered between the $6,300 range to 6,800. There was a very strong consolidation phase. And finally, over the weekend, it has broke out to $6,800. All right, and you can see from the Bollinger Bands in the chart here that Bollinger Bands has been forming a parallel horizontal line for the week. And therefore, we are currently still in a consolidation phase unless more breakout patterns have been confirmed, and therefore we may see more bullishness in the upcoming weeks ahead. All right?
Because for the past couple of weeks, we've been seeing the price bounce. Normally it's big fluctuations, but it's been coming tighter and tighter and tighter. So the fluctuations are getting smaller, smaller. And what this means for us is that the prices is less volatility, which may not be good for some, but for people who are looking to invest in the market, this stability is actually pretty good. I mean, I feel quite happy that Bitcoin prices are starting to be a bit more stable.
Yep.
Yeah, and since it's getting squeezed so tightly, towards the end, there's always going to be a movement in either direction. Okay, so bearing that in mind.
But what are some of the reasons that could have caused that?
Alright, so according to Huobi and their big data analysis, recently in the past week there has been creation of new accounts. So it went up from 3.12 to 3.2 million, and that's after a 3-week decline. This means that Bitcoin active addresses are actually increasing. At the same time, they're saying that old accounts that haven't been active for a while, they're actually also increasing activity. Continuously active accounts have also been increasing. So with this many people now paying attention to Bitcoin, and okay, not every account is a person, but it is indicative that more people are coming into the space. So this increase in volume also leads to an increase in fresh money.
So talking about more people coming to the space, we realize that there are more talents coming to the space too, right, Mike?
Yes, okay, so Gemini has recently hired NYSE, so New York Stock Exchange, Chief Information Officer Robert Cornish. So he's going to be acting as their CTO within Gemini. And if for any of you who don't know, Gemini is one of these huge exchanges.
By the Winklevoss twins.
Correct, the Bitcoin billionaires at the time. Yeah. So this is not new. Someone from an old firm is coming over to this new space. So we also have Emily Choi. She used to be working as head of merger and acquisitions at LinkedIn. So everyone knows what's LinkedIn. Now she's moving over to Coinbase.
Wow.
Another one of the big exchanges. So she'll be doing corporate and business development there as well.
Right.
Yeah. So it's not just big names going over to the blockchain space. We also have young people, millennials, who've made money off crypto. They are leaving their jobs at Wall Street. They are leaving their jobs at all those financial firms.
Which was supposed to be comfortable on Wall Street, and then now they're moving towards crypto, right? So
comfortable, really the right word.
So we are seeing a huge talent switch. We are seeing a huge brain drain, on the financial markets, and now they're all moving towards the blockchain technology or fintech or even cryptocurrencies. Right?
So what does this mean for us? Because in the article they said that some of them have made enough from trading. They have enough Bitcoin or Ethereum that they can afford to lose this monthly paycheck and still be profitable.
Okay.
Yes. So when the best and the brightest start to move over, how does this affect the space?
Well, it all depends on what space that we're talking about here, right? On the financial markets, we do see a lot of brain drain here because talents are not moving towards that sector. You don't see programmers heading towards the bank nowadays. You don't see IT people going there. They are fending, they are fighting, to be as a blockchain programmer, as a blockchain, be it working for an ICO project, and being featured there as a programmer or a team lead, right? So it was, even on the IT and programming side, it's a huge brain drain. Talk about financial sector, talk about trading, everyone's shifting there as well. So you see such a huge brain drain, and therefore I think, in the next few years to come, we will start seeing the repercussions on the mainstream, on the main economy, and
when the main pillars are like financial traders and they're all moving to blockchain.
Yeah, definitely.
So other than the fact that it's lucrative, I control my own hours. I don't have as much pressure. More than that, they are adding legitimacy to the blockchain space.
Yeah, definitely.
Because if I hear that my friend working at Goldman Sachs is moving over, I'll be like, oh, okay, Goldman Sachs is good. If they are moving, this is better, right? So
that makes sense.
Yeah, when opinions shift, market also, the money will start flowing into these new areas as well, right? So I mean, this is positive news to me. I don't know about banks, but it's positive news for myself.
Yeah, but when we are talking about exchanges, there are main two kinds of exchanges, right? Like centralized exchange and decentralized exchange. And Vitalik, which is the founder of Ethereum, or the co-founder of Ethereum, actually made a comment about centralized exchange. So what did he say exactly?
You just wanted me to say that.
Yeah.
Okay. He says, I definitely hope centralized exchanges burn in hell as much as possible.
Okay.
Quoting him, not my own words.
Right.
Okay. So, it's a strong statement, but there is some basis behind what he's saying because, as we all know, he's a firm believer in the blockchain space, in decentralization. But centralized exchanges, they have a few points that kind of go against the mentality. So the first is, coins have to pay about $10 to $15 million USD to get listed on the exchange. And this is not really the way that the blockchain space was meant to be, because now I have coins trying to get listed, and what am I going to do to get listed? I'm going to have to raise money. I'm going to raise a lot of money just to put my coin up there, just for it to gain some traction and some users and some network, which we all know is one of the main value determining things, right? The bigger my network, the more value my coin has, because network effect. So, yeah, what do you think about that?
I think so let's talk about a project, a legit project that wants to get listed on an exchange. And so if let's say they want to raise, say, 15 million, all right? So you realize most projects soft cap is ranging from 5 to 15 million, right? And so imagine the listing fees on maybe a certain exchange is $5 million. That will basically wipe out my entire budget that I have for everything else to build the project legitly, right? And therefore, we kind of aware that there are legit projects that want to be listed, but they are facing so much difficulty because of lack of funds, all right? And therefore, they have to increase their soft cap, they have to increase their hard cap, they have to drive their marketing so that they raise more funds so that they can be listed on the exchanges.
Which is essentially not helping the project.
Right? So talking about decentralization, talking about blockchain technology, talking about financial inclusion, then it kind of defeats the whole entire purpose because of the hefty fees, right? So I do agree with Vitalik to a certain extent, but he did also say one thing, that centralization is still kind of important, right? Because regulation can then come in and help to regulate the space, and therefore help to spread it to the mainstream media, and more people could come into the space as well. So it's a chicken and egg thing.
There are pros and cons, right? Because if I'm centralized, number one, I have a lot of power over the customers' wallets.
Makes sense.
So for example, if let's say I have $900 on Gemini or something, but the minimum withdrawal fee is raised, the minimum withdrawal amount is raised to about $1,000. So my $900 is locked in there. I can't draw it out, even though it is my own money, which is a bit against the principles, right? Because it's my money that I control, which is the point of cryptocurrency. I'm supposed to be fully in charge of my own funds, but now you're telling me I can't do that. And if I have small amounts, sometimes I can't pull it out of cryptocurrency exchanges as well. So I'm left with like point something of a certain token that I can't touch. So this adds up, right?
Yeah, I mean, that's a great example. It's a bit extreme with regards to the $1,900 one, but you get the point, right? It's very difficult to even withdraw and deposit. Sometimes you also need to have a minimum to deposit. So the exchanges really have a lot of power. In fact, they could just close down, and you possibly have no ways to get back your money too, right?
I could just make a lot of noise in the newspaper.
Yeah, and that's it. Like, what can you do about it? Are you going to go to that location to find them? It's tough, right? That being said. So, thank you for watching CG Market Watch.
If you like what we're doing, don't forget to like, comment, and share our videos.
If you do not want to miss any of them, hit on the subscribe button and turn on the notification bell. Thank you for watching.